So last session we started with creation of asset classes. Let us begin with depreciation accounting. Depreciation is what?
Depreciation?
Yes.
When something lost the value, no?
Normal wear and tear of an asset due to a flux of time. A depreciated asset will obviously be of a low value than a new asset. This depreciation, the value goes down because of the nature of asset due to time factor. There are lots of depreciation methods. Most commonly used are two methods: straight line method and WDV, written down value. Okay. So two commonly used methods would be written down and a straight line method. Let's see how depreciation is dealt in SAP.
Okay.
Part IMG, Financial Accounting New. Asset accounting, depreciation, valuation methods, depreciation key. Now all the rates and everything is maintained with this depreciation. The asset master data picks up the rates from depreciation key. To create a depreciation key, there are certain prerequisites. We need to have this in order: base method, declining balance method, multi-level method, and period control methods. These fields will appear in the creation of depreciation. Let's do the first one, define base method. It's an overview. All these are SAP standards. We can select any one of these in the creation of depreciation. So first, base method. Base method, we're going to select 0014. Explicit percentage after end of life. Second, define declining balance methods. Last for your chart of depreciation, ABC1. Okay. Also an overview, we'll use the standard 001. No need to do anything. Third is multi-level method. Define multi-level methods. Transaction code for multi-level methods, AFA-MS. AFA-MS. New entries. Multi-level method 1, AB3. Straight line method at 5%, 10%, whatever is the rate prescribed. Validity start from ordinary depreciation start date. From the date the asset is purchased, we put to use. Depreciation starts from that date. Double click on levels folder. New entries.
Sorry, Ram, in this case, the depreciation will be 5%.
No, I have just given 5%. Different assets will have different rates of depreciation. Might have 7%, might have 10%, some assets might have 12%, some assets might have 18%.
But in this entry will be 5.
I'm just giving 5, yes.
In this entry, okay.
Acquisition year, number of years for which valid. I'm giving maximum number of years because
One second, Ram. Yes, Tamara? I'm in one class. Oh, okay. Is okay? Yeah? Okay, thank you. See you on Friday? See you on Friday. Okay, thank you. Yeah, Ram, sorry.
no problem. Acquisition year and number of years for which the asset will be put to use, I'm giving maximum. The reason being, say for example, an asset is being put to use for 5 years. Say a laptop is being used for 5 years. If I give you a 5, there is every likelihood that the laptop will be used beyond 5 years. Now, at the end of 5 years, I cannot come here and put 6. It doesn't work with retrospective effect. Therefore, I give the maximum number of years into which an asset can be used, 99999.
Okay.
Period, 12 periods, base valuation. Now we'll use two kinds of base valuation. 01 we'll use for straight line method. 24
Sorry,
we'll use,
sorry, Ram, 12 periods because it's 12 months per year.
yes. Period refers to
Okay.
one period is 1 month of doing a business transaction. With the number of periods, 12. Right. Base valuation, next column. I will use mainly two kinds of base valuation, 01 and 24. 01 we'll use when when the depreciation method is straight line method. 24 we'll use when depreciation method is written down value. As of now, we'll select 01. Percentage 5, 6, 7, whatever we have mentioned it as 5, and save. Come back. Next entry, AB4. The written down value method, again at 5%, or validity start, same, from ordinary depreciation start date. Double click on levels. Click on new entries. Everything the same. Acquisition year, years after which valid, 12 periods, base valuation from 01. No more 01, it's written down value, so we will use 24. That's the page. Then save. Back to the IMG screen. Maintain period control methods. Again, on the overview, we're not going to do anything in this. We're going to use the standard 001 or any standard, any of the prescribed standards. Here we have multi-level method. Period control. Zero zero one.
This Excel is in the folder that we have in Drive, no?
Sorry, come again.
This Excel file is in our folder in Drive.
I'm not sure.
Okay. If it's not, could you add when you have time?
No. I'll close this as well.
Okay, thank you.
The thing is, yeah, okay. Sure.
I don't going to touch now the Excel, but when I'm watching the videos, is
I
like
know you
helpful.
would like
Yeah,
to cross out
yeah.
the line.
But I follow your steps.
I understand. I'll do that. Once you're done with these pre-configurations relating to depreciation key, close calculation methods, and execute, maintain depreciation key. New entries, depreciation key is a 4-character depreciation AB03 and AB04. 0102 has already been created. That's the reason I'm doing 03. Straight line at 5%. Okay, I'm sure you're aware of what straight line and what written down value is. Yeah?
Mhm.
No?
In this case, with the depreciation, I'm not sure.
No, I'm asking in general accounting concept, accounting context.
Not sure if it's not sure if you can tell
Okay.
me, because maybe
For example,
because I study in Spanish and maybe we use different.
say asset, asset for asset purchase for 100,000. Depreciation rate 10%. When I mean 10%, I should either specify what method of depreciation I'm following. Am I following straight line method or am I following WD? Let's say, for example, rate of depreciation at 10%, straight line method, which means for year one, the depreciation rate would be 10,000 into 10%. I'm sorry, 100,000 into 10%, 10,000, right?
Mm-hmm.
And the value of the asset would be 90,000. I would now carry forward this 90,000 to year 2. And say the useful life of the asset is 5 years. Year 2, I would carry forward this balance, 90,000. This value. And depreciation amount would be year 2. Year 2. Year 1. Depreciation amount. Because it is straight line, the depreciation
Yeah,
amount will be the same all throughout the 5 years.
yeah, but in year 2 will be depreciation 10,000 and the
So
value will be 80,000, no?
now 80,000 balance carried forward.
Ah, the
80,000.
balance, okay. Mm-hmm.
So year 3, 80,000 would be brought forward.
Value will be 80,000, depreciation 10,000, and the balance 70,000.
Precisely right. So straight line method means the rate of depreciation, the amount of depreciation remains the same for all the useful life. It remains 10,000 for all 5 years. Now let's say it's WDB. I'm sorry. Written down value. Okay.
This was the example of
Okay.
a straight line.
Yes. Now we are going to do the written down value. In case of straight line method, the amount of depreciation remains the same for all the years. 10,000,
Yeah.
10,000, 10,000,
Mm-hmm.
10,000, 10,000. Case of written down value,
Uh-huh.
depreciation amount for the first year 10,000, value 90,000, carry 90,000 forward. The depreciation amount would be 90,000 into 10%, 9,000. As the name goes, written down value, the depreciated value is calculated on the depreciated value which is brought forward. 90,000 into 9%, value becomes 81,000. Year 3.
But sorry,
Mm-hmm.
how you calculate the year 2? 90,000 and the press.
90,000
Mm-hmm.
into 10%.
Uh-huh.
How do we come
Uh,
to 81,000? 90,000 minus
you may, yeah, okay. You made
okay,
the percent for the, not for the 100,000 every year. You made for the value, the balance
that is what is
every
the
time.
meaning of WDV, written down value, or written down value is also called declining balance method.
Okay.
Both, it's just a different terminology. Declining balance method. Declining balance refers to the value which is getting declined. Depreciation is calculated on that. 81,000. Now for year 3, value 81,000. Depreciation amount 81,000 into 10%. 8,100. I'm sorry.
Depreciation and value, no?
Okay. Now the balance would be 81,000 minus 8,100. 72,900. Now for year 4, depreciation 72,900 into 10%, 7,290. Balance 72,900 minus 72,900 minus 7,290. 65,610. All right. Understood? Clear?
Yeah.
All right. Let us. Yes, we got closed. Maintain depreciation. Please skip the depreciation key. ABC1. Enter. Or this green tick. Continue. New entries. Give a depreciation key. AB03. Description. Straight line at 5%. Please check mark on depreciation to the day. This one. Which means depreciation will be calculated on a daily basis. And after that, please click on assignment of calculation method. Yes.
And this will be the straight line, so every year the same depreciation.
Yes. Whichever we select, it will calculate on a daily basis, every day. Depreciation to be calculated every day. Double click on assignment of calculation methods folder. New entries. Okay. Depreciation type. Ordinary depreciation. Phase, as usual, from the start of depreciation. Now these are the ones which we just created as pre-configuration part. Base method, declining balance, multi-level, period control. Base method 0014. Declining balance method 001. Period control 001. A multi-level methods, we had created two multi-level methods, AB3 and AB4. Select any one depending on what kind of depreciation we are doing. We are doing straight line method now, so let us select AB3. And please select the class from the drop down, straight line depreciation. Do not save now. Please hit the back button 2 times. 1, 2. The reason being, the depreciation key before saving will be in inactive status. We need to activate it first. There's this activate button here, activate depreciation key. Please click on activate. Sorry.
No problem.
Activate and then save.
Okay. I hope remember this. Double click back and activate. Okay.
Yeah.
Because normally it's always that we do something is save. But in this case, no. Okay.
Yeah. So asset accounting, asset is not, I wouldn't say difficult. It's a bit dicey. You have lots of small steps. Only practice will get you there. Back to the initial stream, and now it becomes active status. Next entry. AB04, written down as 10%. Please check mark on depreciation today. Double click on assignment of calculation methods. New entries. These are all the same. Depreciation type ordinary. Base from the start of depreciation. Base method 0014. Declining balance method 001. Period control 001. A multi-level method, the second one. AB4. Class, please select as declining balance depreciation. Declining balance or WDV written down value both are the same. Hit the back button twice. 1, 2. Click on the activate depreciation key button. Then save. You come back. You will notice that you'll notice that the status has become active. Active active. Once depreciation key has been created, it is now time to create asset master data. Transaction code AS01. Now before we create an asset master data, there is something to be done. 3 configurations before creating an asset master data. To create any master data, there are some 3 configurations. In case of asset, it is a bit complex. First, AO21, depreciation screen layout. Then AO19, change asset class. OAYZ, we activate the depreciation keys in this depreciation area and enter the depreciation keys. This has to be done in a sequence. Let's go to AO21 first. Okay. Screen layout for depreciation areas. There's no new entries in this. We will have to copy from the existing standard. We'll copy 1000 for all assets and 100A for AUC. Copy 1000, copy X. Rename it to something A1. Any 4 characters of your choice. Any 4.
AB01, AB01.
We'll have AB01, AB02. Land does not have a depreciation value. It only starts with building. Enter. If you get this error, specify maintenance level. Please click on skip. Yes. Again, copy 1000. AB02. depreciation on plant and machinery. Enter. Skip. Enter. Now once again copy 1000. AB03. Furniture. Enter. Skip. Continue. Copy. 04. Vehicle. Copy. And for AUC, you copy 100A. Yes. Enter. Skip. Save. Once the depreciation screen layout has been created, we go to AO90. In AO90, we have to assign a minimum of 7 GLs. Now, what are these GLs? It's basically account assignment. Basically, the system picks up the GLs which are hit during posting of entries. Now, what are these 7 GLs? These 7 GLs are the APC cost, the acquisition and production cost, the cost at which the asset has been procured, then gain on sale of asset, loss on sale of asset, loss without revenue, loss with revenue, depreciation GL, accumulated depreciation GL, clearing account GL. So the 7 GLs would be the asset account, where I'll write it down here, fixed asset GL, accumulated depreciation on that fixed asset, loss on sale with revenue, loss on sale of asset without revenue, gain on sale, asset sale clearing account, 1, 2, 3, 4, 5, 6. Depreciation, expense depreciation. This depreciation comes in the profit and loss account. Accumulated depreciation comes in the balance sheet. The 7 GLs we will create in FS00, GL master data, FS00. Then come to AO90 and do the account assignment. First, let us go to FS00. Fixed asset. Uh, sorry, this is a different company. Click on create. Give the GL number 200000. Company code ABC1. Enter. Select the direct account view, fixed assets. This is a balance sheet item. Control date. Reconciliation account for account type. Please mark it as assets. Line item display. Sort key. Create bank interest. G067 for all reconciliation items. Save. Accumulated depreciation. Create. Please enter the GL number. Around 200. Enter. cumulative depreciation on car, same way as fixed asset GL is created, reconciliation account, line item discipline, uh, zero, third one, loss with revenue, loss without revenue, gain on sale. All three will come under, sorry, loss with revenue, loss without revenue, and depreciation come under expenses. Copying from 400, 314, 400, 315. With revenue refers to there is a resale value when you sell the car. Without revenue refers to scrap. Clearing account, asset sale, clearing. Sale. We have gain on sale of assets. Comes under other income, 300105. Sale. And what else? Depreciation. 400, 500. Miriam, can you just give me a minute, please?
Yes, yes, yes.
And depreciation, 400, 500. Pay in a line. Now that all the GLs have been created, we'll assign all these GLs to AO90, account assignment. Let's go to AO90. Please select our chart of accounts, ABC1, and double click on account determination folder. Now select that account determination for which we have created GLs. Okay. We have put GLs for car. Car comes under the category vehicles. So please select ABC1 3100 and double click on balance sheet accounts. First one, APC. APC refers to acquisition and production cost, the cost at which the asset has been procured, plus installation charges, if any, plus freight, this GL would be the fixed asset GL we will do. 200000. Loss made on asset retirement without revenue. Loss without revenue. 400316. 400316. Clearing account 400317. Gain from asset sale GL 300,105. Loss from asset sale 400,314. 400,315. Save. Continue. Now double click on depreciation folder. Cumulative depreciation for ordinary depreciation. $100, $200. And expense account for ordinary depreciation. I guess 400, 500. Yeah. Save. AO21 done. AO90 done. Let's come to OAYZ. In OAYZ, we do three things. One, activate the depreciation areas. Two, uh, we input the depreciation screen layout, which we created in AO21. And third, we enter the depreciation keys. Let's go to OAYZ. Please select the asset class for which GLs have been put. ABC1310, car to general manager. Please select ABC1310 and double click on depreciation areas folder. There's three things to be done in this step. One, activate the depreciation areas. By default, it will be in deactivated state. Please remove the tick mark. And both the depreciation areas have now been activated. The next thing we do is we activate the depreciation screen layout. Depreciation screen layout we created in AO21. AB04 for vehicles. Lastly, we need to enter the depreciation key. But the depreciation key is a grayed out field. It's not enabled. So what you do is, after activating the depreciation areas and entering the depreciation screen layout, hit enter. When you hit enter, the depreciation key field is a mandatory field. Give the depreciation keys that we have created, AB03 or AB04, any one of these. Save. This process has to be repeated for all the other assets. I've just done it for cars. And it has to be repeated in a sequence. First AO21, then AO90, then OAYZ. Okay. Now let us go ahead and create asset master data, AS01. Please enter the asset class. ABC1310, car to general manager. Please click on master data. Let's go to Origins tab, wherein if it is purchased from a vendor, afresh, we need to enter the name of the vendor and check mark this asset purchase new. Or if we are purchasing it used, which means second hand, then we check mark purchase used. Original acquisition year, value of the asset, and click on the last tab, depreciation area, to give the useful life of the asset, 10 years. Save. Fill in all required entry times. Okay. Redo A01. Click on master data. 10 years to useful life of the asset. Save. Our first asset is created.
Okay.
The asset number 401. This is asset master data. We have something called AS11. There is number of similar assets are grouped into one category. So under 401 you will have 4011, 4012, similar kind of assets. Click on master data. This will be card of general manager. Another card too. Again, is it purchase new or is it purchase second hand? Now it comes asset 401. 1 is created. Earlier it was 4010. The main asset number is always 0. Okay. There's a report called before that, F-90, purchase of an asset from a vendor. We debit the asset, credit vendor. Thirty-one, credit vendor. Please enter the vendor number. 61. Enter. In amount. Posting key 50. I'm sorry. Posting key would be 70. In case of assets, there are only 2 posting keys. If asset is debit, then 70. If it is credit, then 75. 70. Please enter the number of the asset, 401 or 4011, and enter the transaction type. In case of an asset being acquired from an external vendor, it is 100, predefined standard. Start, plus, display document overview. Debit asset, debit asset, yes, credit vendor. First. One asset we have purchased. There are a few more transactions, business transactions. I'll complete that tomorrow and start controlling. Thursday I might not be available, so is it possible that we can do it tomorrow?
Okay, maybe so. Maybe tomorrow at the next time at the same time, more or less.
Sorry?
You said that maybe you can do the class tomorrow instead Thursday.
Yes, that's what I'm saying.
Okay.
Just let me know. Let me know if it's not possible. Let me know. We'll do it on Thursday.
I can ask to my manager because I say that I request.
Have you already asked him?
I asked for Thursday, but I can ask that
No, it's okay. Then we'll continue on Thursday.
No, it's not problem. She is very nice. She can. I think for her it's not problem. I can ask tomorrow and it's fine.
No, that's okay. You'll have to again.
As per you prefer. For me, it's fine tomorrow.
Okay.
If you want text me tomorrow morning, let me know me, and I prefer today, and I request my manager because she is not present on Wednesday or Thursday. The only day that I can't is on Friday because we have a meeting outside the office and I can't. But tomorrow or Thursday, the best day for you, Ram.
Okay. Okay.
Okay. So let me know tomorrow, okay? And I will ask to her.
All right. In all probabilities, we'll have to. We'll try to have it on Thursday itself.
Okay, no problem.
Let's see.
Let's confirm tomorrow, okay?
Sure, I will. I will text you. I'll message you.
Thank you. Thank you, Ram.
Thank you.
Good night.
Yeah, sure. Thank you. Bye.
Bye-bye.